Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, March 21st, 10 minutes after market close here in Jacksonville, Florida, 4:10 p.m. Eastern time to be exact. And in today's video, we're going to talk about looking under the hood. We got plenty of headlines swirling around, as you can see right there under what just happened. A Powell press conference today around lunchtime caused a big midday drop. Some hawkishness, talk about getting inflation under control and what they may or may not do with their rate hikes, as well as many other headlines swirling around with Russia and Ukraine and whatnot. So we're going to talk about what's going on under the hood outside of all these headlines and what Powell's saying and what's going on across the seas. We're going to look at the charts and we're going to look at how we digested today's action following a really strong finish to last week. So moving on here, under the what just happened. Like I said, the Powell press conference causes midday drop, but the indices finish well off the lows. So G6, a laggard today, along with the Russell 2000, down about 1%. S&P more or less flat, just down just a small amount here, 0.04%. Q's down about 0.33% here. Dow Jones Industrial Average down 0.58. Mid caps also down about 0.33%. Russell down 1%. 60-40 down 0.5%, and Protection up about 0.4% today. And we'll get into why that was here in just a second. Market state remains in cautious uptrend until we get the S&P, the Qs above the 50-day definitively, above the 200-day definitively. That cautious will probably remain there. No changes to the trend gauge either at this moment in time. Market leaders remains the same. We saw some healthy action from the leaders today, and we're going to get into that in just a second here. Short term also remains the same. Medium, the Qs were actually rejected at the 50-day today, but the S&P got a close above, another close above. So we're getting some positive action here on the 50-day or the medium term trend. Be on the watch for this one to move towards that neutral range soon, as we've got the small caps and mid caps trying to stay above their 50. Seeing some more positive action from the S&P trying to stay above its 50 as well. And then long term also remains the same. So before we get to the tail of the tape, like I always do, let me briefly highlight Revere and myself. If you have any questions, any comments, want to know more, whatever it is, just send me an email and I will happily respond to you. Or if you're interested in what we do, you want to ask Dan a question, whatever the case may be, you can email anybody here, Dan, Tim, Merrill, or Don at revereasset.com as well. So let's get into the tail of the tape. And this is the S&P over here on the right side of the screen. So we're just going to work through this quickly here, okay? So the headwinds, as usual, they remain the same for the time being. U.S. dollar, inflation in the forefront today with Powell's comments, as well as interest rates. Russia and Ukraine, obviously an ongoing issue. So all of these headwinds, AKA, and some headline-oriented stuff here, very much prevalent in the market and not necessarily going away at this point in time. Put call ratio still has stayed below that key 1 level. So even though it finished at 0.86, it was kind of around 0.8 for the better part of today. That's something we haven't seen very often this year, staying in the 0.75 to 0.85 range. We've been much closer to 1 for the better part of 2022. The VIX basically flat, finished right around 24, 23.67. Fear greed also no change today, also at a 37. So that pretty much stays the same there. Sentiment more or less kind of right about where we were on Friday. Bull case initiated the rally. We did that, reclaimed the key moving averages. We are working on that. So we closed above the 50 today, as you can see right here, but under the 200, but back above the 21E. Obviously, that's the green line there. So some positive action, actually reclaiming some of those key moving averages here on the S&P. Bear case would be a break of that 21 EMA. So at this point in time, that's about 43.50 is about where that's at right there. On watch this morning, what would the S&P do versus 200-day resistance, ultimately rejected, or at 50-day support? So we failed at that 200-day, but we didn't necessarily break back below the 50-day. So kind of stuck between the two, if you will, a sandwich more or less today between the 200 and the 50 here on the S&P. Action-wise, open slightly green, had some was looking relatively positive into about the middle of the day, but reversal at the 200-day. Obviously, Powell's press conference in the middle of the day had something to do with that, and then closed up off the lows, but about in the middle of the range. Notes-wise, we had 10-year interest rate making a new high, growth lagging early this morning, and the Qs failing at that 50-day pretty much right out of the gate at the same time we saw this S&P failing at the 200-day, roughly around mid-morning. Already went through this performance here, opened just slightly up, finished just slightly down on the S&P, G6 down 1%, 60-40 down 0.5%, grow up about 0.4%. Sector-wise, oils, fertilizers, steel, gold, silver, and miners all acting well. Metals and mining ETF and defense stocks all strong today. On the bad side of things, TLT, ITB, that's your builders, communications, technology, discretionary, biotech, software, and retail all not doing so well today. Portfolio-wise, we did have 2 new buys. We bought CVX and we bought Bros. However, our beta did not change because we also bought an inverse ETF, SARK. This is a short ETF based on ARKK. So the bottom line, after 4 strong days up, this is relatively normal rest and digestion behavior. Obviously, the Powell press conference throws a little bit of a wrench in it, but a lot of really positive action today in some of the market leaders, and we'll get to that in just a second here. So moving on here in the key levels, as you can see, this is still staying the same. The 40-week and 200-day still roughly right at these levels here. But we are seeing the 21 EMA start to rise, as I said, right here at 43.50. And we're seeing, we are getting our second close here above the declining 50 SMA, as you can see here. So second close above the declining 50 simple, and obviously well above the now rising 21 EMA, which was declining for quite some time. And as I said in Friday's video, getting back above the 200, reclaiming this 4,500 level on the S&P is a very big deal. So let's get right into the charts, and I'm going to refresh this for you guys here. This is the chart of the S&P. So as I said, basically sandwiched between the 200 and the 50 today. Nothing wrong with that, relatively normal behavior here. Now we want to see, what do we do over the course of this week, and what do we do when this 21 and this 8-day that are now hooking upwards catch up to us. But for the time being, this is a very normal digestion day after 4 really strong days up here. And I'm looking on the S&P. On the Qs, it's going to look very similar, except we're still way below the 200 days. So 4 strong days up, rejected at the overhead 50 here, but nothing wrong with this action. What we want to see is, what do we do as this 21 and 8 start to catch up to us? Do we flag out here and ultimately push through 350? That's what we're on watch for this week, is how do we handle this really strong move over the course of the last 4 or 5 days. Today, although it was relatively volatile on an intraday basis, more or less pretty normal, healthy consolidation type of action after a move like we saw last week. And let me go to the Dow here first. DIA also attempting to close, make its second close above the 50, basically closed right on it. So we're going to give it the benefit of the doubt. DIA going for its second close above the 50 today too, although it was just by a couple of cents there. But same thing as we saw with the S&P and the Qs, really not going a whole lot, going anywhere as far as making a big move to the up or the downside, just a kind of a consolidation digestion candle closing right in the middle of the range. Same situation here. What do we do as the 8 and the 21 start to hook up? We're looking for any type of consolidation or flag here. That's what we're watching for on the major indices. And then lastly, let's run through these. IWM, this is your Russell 2000, back above the moving averages with a little bit more oomph, as you could say, or more consecutive closes. But keep in mind, small caps and mid caps were flat for a lot longer while the S&P and the Qs were moving upwards. So they were just closer to these moving averages as it was. But nonetheless, a strong move to reclaim this 200 level. And same situation here, relatively normal candle, normal digestion. And then we're going to see MDY looks very similar pattern-wise to what you see over the last 3 or 4 days with all the other indices. So just like the S&P, unable to get above the 200-day, but hanging in there pretty decently after that rejection. So that's kind of the recurring theme here on the indices, is initially rejected, or some digestion today, but nothing necessarily out of the ordinary or really wrong at this point. So moving on here, let's take a quick look at the TNX, or the 10-year yield. And as you can see, this made a strong move today. Rates continuing this really big move up above 2. As I've said before, think of this area as 2%. So this is a strong move for the 10-year note above 10%. So inherently, that was beneficial to your value / commodity stocks, which were really strong across the board today and really gave Grow a boost today. So Nucor up about 5%, pretty strong action today, although the volume was not huge. CF, another commodity related name, up about 6%, as you can see, back over this 100 level as well. Moving forward here, and we're going to go through a handful of these. HAL Halliburton up 4%. And by the way, those last three I went over, Nucor, CF, and Halliburton, are all owned in Grow-Tection, contributing to the fact that Grow was green today. And as I did say, we bought Chevron right here after this consolidation, kind of to the 21 and the reclaim of the 8. Bought a position in Chevron today for Grow-Tection. Another commodity type of related name here, DAR, having a big move with some big volume. I've talked about this one over the last couple of weeks, up about 6%. And NVIDIA, I know we're out of the commodity space here, but NVIDIA showing some nice relative strength today. As you can see, green while the markets were down, but really showing nice relative strength more or less all day long. We also saw AMD, which has not acted as good as NVIDIA recently, but we saw it show some relative strength today as well. So AMD, NVIDIA showing some strength. Tesla also showing some strength. Was green pretty much out the gate, stayed that way all day long, and stayed above the 50-day moving average for the first time in a long time, as you can see there. So Tesla and NVIDIA, two really important stocks to the market, acting really well on a day where the markets were digesting and pulling back. So this is what I mean when I say let's look under the hood. You know, you see the Qs are red, but two of the leading stocks in that index for the Qs, Tesla and NVIDIA, showing really nice relative strength. So just a little clue here of kind of what I mean by looking under the hood. We also saw gold miners act well today. GDX, I know we mentioned that when we were going over the tail of the tape. This is a gold miner. Newmont, FNV, another well-known gold miner. Both charts very similar, but continuing to act pretty well after a pullback to the 21 here. Just a few more here. Defense stocks, as we said, I'm not going to go through all the charts here, but ITA, this is an aerospace and defense ETF. You can see up 1.5% roughly today, but a nice day for a lot of the defense stocks, Raytheon, Northrop Grumman, Lockheed Martin, names like that. And lastly, Bros we bought today. Nice action here, some nice relative strength versus a lot of other growth-oriented names. But a position we took a stab on today here, nice inside day on Bros. So moving on here to some of the stuff that did not act as well, and we're going to start with cybersecurity. This ETF just kind of encompasses the weakness today, but we saw names like FTNT, Fortinet, and Checkpoint initially weak this morning. Other names like Net and Crowd also weak, but cybersecurity, a little bit of a laggard today across the board. Additionally, some of these high beta names, they're not all created equal, right? So Docs, which had a pretty strong reaction to close the week out, down 8.5% today. Just moving through some of these. GFS, another name that had a really strong finish to the week, down 6% today. But if you look at this in context to the move they made, although this is down 5% today, it's not that big of a deal in terms of they went from 57, 58 to nearly 80 here in a matter of 4 days. So you have to keep that in mind when you look at some of this stuff that's down relatively a decent amount today. Datadog, another good example here, up from roughly 118 to 150 almost in a matter of 4 days, down 4% today. But like I said, if you look at this in context of the move that it's made, although there is some volatility, a lot of this stuff is relatively warranted in normal moves given the volatility of the stocks. So another laggard today in big tech world, Microsoft, although it finished well, it started off and pretty much all day long was lagging Apple and some of the other big tech names, but It did manage to poke its head above the 50-day for the second consecutive close, which it has not done since the start of the year. So another one of those small positive signs under the hood that we're seeing here in the market. Additionally, we saw Apple come back from being weak this morning and end up actually showing some relative strength today, which obviously is important to the market. Apple is a very, very big stock and dominates the indices. ITB, moving back to the negative stuff here for a second, ITB really negatively impacted by the strong move in rates. As you can see, down 3.5% nearly today. That is really what caused this nasty, nasty sell-off here in the home builders, was a really strong move in rates basically since the start of the year. So ITB, a big laggard today. I mentioned retail, another big laggard in ETF or sector world, coming all the way back here after touching this 80-ish area. And just a few more. As I mentioned, we bought SARK. That is a inverse ETF to ARKK. So you can see if SARK is going down, that means ARKK is going up and vice versa. So took a chance here as a tactical hedge. We'll see how this plays out. But 4 really, really strong days up for ARKK. And lastly, just on the sector front, some of the worst performing sectors today were also some of the best performing sectors from the last 4 days, which again, further proves my point or alludes to the fact that this is some relatively normal digestion. So just on that point, XLY, XLK, SOX, all lagged the Qs and lagged the S&P today, although not by much. As you can see, we finished pretty well here, but all of these sectors had really nice outperformance and were some of the top performing sectors last week. So seeing them lag today is completely normal after 4 strong days up. So that's kind of what I mean when I say look under the hood here. We have Tesla and NVIDIA showing really nice relative strength, Apple coming on well as the day wears on. Some of these sectors that were laggards today were also the big time strong sectors from last week. So just kind of taking that all into perspective and not just paying attention to the headlines. That's what I wanted to break down this video, was just the facts, what the stocks were doing under the hood. And hopefully I did a good job of that, because that is going to wrap up today's video. I hope you guys enjoyed it. If you have any questions, just please send me an email and I'll happily respond. So thanks everybody and have a great week.